and welcome. You're watching the daily edition of Your Trades on ET Now. This is Priyanka. I have Snehi with me. Snehi, what a recovery session we saw, though it was a session of consolidation. We were in a tight range of, say, 150 odd points on Nifty. Bank Nifty did saw a range of about 400 points. But yes, it was more or less a session of consolidation, at least after a huge sell-off what we saw yesterday. But then Nifty did held to 23,700 levels. Broader market saw bigger action. If you talk about mid cap and small cap did surge more than 1.5%, 1.7% precisely. Mid caps also surged more than 0.5%. But clear-cut standout gainers, the sectors which gained the most during the session today were spaces like consumption, energy, media, metals, commodities. On the flip side, the losing sectors were IT. Now, noticeably, IT, which is kick-starting the earnings this week itself with TCS on 9th Jan. IT pack seems to be in pressure at the moment. So the biggest losing sector today was IT, and the biggest losing counters on Nifty was also from the IT pack only. IT, along with consumption, some auto names, these were the sectors which were trading with a pressure today. But clear-cut, some of the standout gainers came on the back of the brokerage notes and, of course, the business updates. You talk about the likes of ONGC, which happens to be the top gainer on Nifty. CLSA did come up with a high conviction, not just overweight rating, but a high conviction overweight rating, wherein they have given an upside of 42% and the target they've given of a 360, and cited multiple reasons to support their view on that. So ONGC did surge nearly 4%, top gainer on Nifty. But then we did had some on the flip side, like stock like from the broader market like Zomato, wherein Jefferies downgrade did made the stock nervous. Stock lost more than 4% during the day. We'll pull up the screen. Zomato was more than 4%. Target price was cut. EPS and EBITDA estimates also cut in by Jefferies. That's what made the stock in pressure. But then at the same time, Biocon, that one surged. Jefferies raised the target, and this was also one of the top counted from the entire pharma pack also. So a lot of action coming in on the back of the brokerage one, and of course, wherever the earnings visibility is.
Absolutely. So these were some of the pockets in the markets that were doing well. Another area to watch out for, we've seen some trouble coming in recently for the rupee. The rupee got a breather today because the dollar has slipped to a one-week low on speculation around what Trump's tariff stance could be. So the dollar has dropped to a one-week low. Rupee has seen some sort of a breather against that. Yen continues to weaken. So let's see how this impacts the entire yen carry trade, and also what the Japanese central bank is going to do when it comes to raising the interest rate or hiking that, because they were heard giving this commentary yesterday that is something that they are mulling in terms of course of action going ahead. So central bank action going to be in focus from Japan particularly. You also have an exclusive story that was broken by my colleague Prakash Priyadashi earlier today, where the government has prioritized gas allocation for the PNG segment. So a couple of these stocks with high exposure to PNG clients, that was doing pretty well today. That basket was doing well. Also, the big announcement came in from the Election Commission today. They've announced the Delhi Assembly polls schedule. Delhi will be voting in one phase on the 5th of February with results out on the 8th. So that is also something that we heard in today's market. But to discuss everything that we saw in today's trade and what can we expect heading into tomorrow's trading session, let's welcome on board our technical analyst for the day, Lakshmikant Shukla, who's a technical analyst, institutional research at Yes Securities India. Lakshmikant, hi. Thanks so much for joining us on the show. Give us a sense of what we've seen from the market today, especially given the way the VIX had surged yesterday. Today we've seen a significant cool-off coming in on the VIX today. We have managed to hold down above the 23,700 levels. Was yesterday's correction just a one-day sort of a downtick that we have seen, or do you think this kind of correction could continue going ahead given so much is happening globally, and back home we also have the earnings season kicking in? So is today's fillip temporary? Can we expect more action like the one we saw yesterday, or can today's momentum continue and be carried forward ahead as well?
Good afternoon, Snehi, and good afternoon, Priyanka. Thanks for calling me on your show. Now, talking about the market, yesterday our market witnessed a significant decline, with the Nifty decisively reaching the crucial support of 200 DMA levels around 23,900. Now, this level could act as the formidable resistance. See, our index has already witnessed a significant 10% correction from its all-time high. Despite this, index continued to show weakness. So on the daily chart, Nifty is started trading near its crucial trendline support while forming a inverted pole and flag pattern on the daily chart. So this is the key technical formation which we have observed in the Nifty. So what we are expecting from current level, that if Nifty breaches the levels of 23,460, then we could see further decline as it is still trading below its key moving averages. And even we have observed bearish crossover from 20 and 50 DMA with the formation of red tall bearish candle on the daily chart. So overall structure looks tentative till it hold below the levels of 23,900. However, if it able to defend the our mentioned support of 23,460, then we could see a pullback move toward the levels of 23,900 to 24,100. But major upside move will be unlikely till it hold below the levels of 24,250. So I think that would be the upcoming levels for the Nifty. And if we look at the structure of Bank Nifty, so it's already broken its support of 50,600, where 200 DMA is placed. It has already given that inverted pole and flag breakdown. So Bank Nifty breaches the levels of 50,600, then we 49,600, then we could see further decline in Bank Nifty toward the levels of 49,200 to 49,000 zone. So overall looks structure. Overall, if we look at the structure of both the indices, that looks tentative. And until we get a major short covering from the FII selling, we could see a more downward move in both these indices.
Out of the woods, that's what Lakshmi is talking about. But then in that, help us understand which are your top two bets that you want to recommend to our viewers.
See, in that kind of market, wherever when market started trading near its crucial moving averages, so we could find out some long and some short kind of trade. So if we see any rebound, then definitely our buying call can give good amount of return. And if it breaches this mentioned support, then we could see we can take profit from our short call. So first, I would like to discuss about the buying recommendation. So that is from auto sector. So one can go long in Tata Motor. See, from last few days, this stock has rebounded from its lower level, and we have seen positive divergence in the RSI. And we could, again, from for the last 3 days, this stock has been consolidating about 220 DMA, and we could expect 3 days consolidation breakout of the levels of 800. So even from the current level, one can go long with the stop loss of 760. And once Tata Motor cleared the key hurdle of 800, then we could see upside momentum in this stock toward the levels of 850, which is our first target. And talking about our selling recommendation, so that is Siemens. So one can go short in Siemens in the current contract, because this stock has given double top breakdown on the daily chart, and it has also formed a multiple bearish candle on daily as well as weekly chart below its key moving averages. Even if we look at the today's structure, so after 2 days decline, it has formed doji pattern, which is again showing some selling pressure in the counter. And even we look at the stochastic, which has given negative crossover, so which is again indicating some selling pressure in this stock. So one can go short in Siemens with the stop loss of 6,660, and can expect a downside move toward the levels of 6,180.
Thanks for your view as well as your picks both on the long and the short side. On that note, we'll let you go. Thanks so much for joining us. Let's keep it going with word from experts then. And Gautam Trivedi, the managing partner at Nepean Capital, believes that investors are looking at financials from a valuation point of view, but he's not convinced about investing in the private sector banks. Let's go across and listen into his rationale.
People are looking at financials from a valuation, and the fact that it's been dead money for the past 2 to 3 years. A lot of the big name private sector banks have done nothing for 3 years in a row. But I am still not fully convinced that now is a good time to put money in financials. System credit growth is down to 11%, which was about 13% in the second quarter. I don't see any major NIM expansion anytime soon. Unsecured retail lending is still a major issue, which includes MFI. And a lot of the private sector capex, which hasn't really taken off, but whatever has taken off is largely being funded by equity issuance, internal accruals, and a lot of the larger groups are taking foreign debt. So that credit growth, I don't see it necessarily coming back in a hurry. And if that's not going to come back, just looking at mere valuations to buy a sector or stocks, I don't think it's a good idea.
The growth continues to be sluggish. This is what Gautam is also indicating at. Let's shift focus to another piece of interesting research that has come in from Kunal. The Nifty continues to languish below the 23,700 mark. Now, with the likes of metals and even the PSU banks dragging the index, what's in store for the indices? Are we at a make or a break point? And is the market staring at further downside? Kunal joins in with an analysis of the charts.
It's very important to understand the structure of the market technicals over the last 2 years, 3 years for the indices, and how over the last 2 years or 3 years, we've seen many a times the indices go into this sharp panic kind of a selling. Apparently on every major selling, we've actually seen the indices holding on to a major trendline support. So now this is the trendline which starts from 2022 lows for the index when the Nifty was 18,000 or sub 18,000 levels. As you can see that over the last 2.5 odd years, every major correction for the index somehow gets settled almost exactly at this major trendline support for the Nifty. Whether it's the recent election correction also for the index when the Nifty was down in 10% or more, even that correction managed to stall or stop exactly at this major trendline support. The recent correction which happened in the month of November 2024, where the Nifty retested 23,200. Even over there, we managed to retest the major trendline support over here. And so far, after the bounce and the further correction into the indices, we are still hovering closer to the support point. So we are at a very, very critical zone for the indices. And looking at the structure over the last 2.5 odd years, we've seen that the index somehow manages to take support over here. So what we outline is a major support point for the index. So that comes to almost 23,300 to 500 range for the Nifty. And almost similar is the case with Bank Nifty. The only change which we're seeing for the Bank Nifty is that in the last 2-3 months, we've actually seen the Bank Nifty trading into a zone of consolidation. So as you can see that over the last 3-4 months from the month of July, August 2024, we've seen the banking index remain into a range of 50,000 broadly as a support and 53,500, 54,000 as a resistance. So again over here, after the last 2-3 years of uptrend, then a mild pause or a consolidation, we are at a cusp of a major retest of the trendline support for the indices. So which means that the near-term trend for the index would depend on whether we break below this critical support points for the indices. If we do, then this could be a major reversal for both the indices, Nifty as well as for the Bank Nifty, and something which I believe could probably play into effect for not just few weeks or few days, but potentially over the next few quarters also.
Thanks, Kunal, for that detailed view on where we are headed and what we can expect to see in the trading sessions to come. But on that note, time to slip into a short break on Your Trades. We'll be right back to discuss about all the important market action to watch out for. Back to Your Trades. Let's take stock of what the FNO action shaped up to be like today, and here's what the derivative diary looks for the index future trends for this Thursday. For the January expiry rather, the trend for Nifty, we're seeing some long build up over there, so looking positive when it comes to Nifty, especially after the slight recovery that we've seen today compared to yesterday's tumultuous trade. However, when it comes to Bank Nifty, we're still seeing some short covering over there, so Nifty Bank looking slightly cautious as of now to traders as well. On the India VIX front, we've seen a significant cool off coming in today, more than a 6% cut coming in, and India VIX has managed to close below the 15 mark at 14.7, so that's looking positive for India VIX. And when you take a look at the active call and put levels for the options then for the 9th Jan expiry, which is this Thursday, active calls being seen at 23,800, so call writing seen as those levels, and 23,900 as well, making 23,800 the next upside level, the next resistance level to watch out for. However, on the flip side, some put writing was seen at 23,600 and 23,500. We do not have any visibility on the support right now, but 23,800 on the resistance looks good, and that's going to be the next breakout point for the market. Once we're able to sustain that, recovery could be on the charts, but well, yes, nothing on the support as of now, so we continue to remain cautious on the markets, Priyanka.
All right, and in fact, there is a resistance, what we can see in the immediate, and that's what Lakshmi was also pointing out, that he does not have a conviction of buying at these levels till the time he sees a respectable level that market crosses. Moving on, let's get you the big story of the day, and that was Zomato, which cracked by another 4% in the trade today, marking a 9% of fall over 5 sessions, as analysts believe the best is already priced in. Intensifying competition in the quick commerce space could play spoil sport for the company. Sharad joins in with more details on the recent brokerage note which is coming.
Looking at Zomato, you see over the last 1 month itself, the stock is down more than 10%. From its all-time high levels, if you look at it, it's down 17%. An interesting report came from Jefferies where interesting data points came, especially from the pressure coming from the quick commerce segment. And of course, if you look at it, they're discounting over the platform. That's the data which we are looking for over here. Zepto, Super Saver, Flipkart Minutes, its peers, they have given a higher discounting levels also. That means the discounting pressure is coming across loyalty programs in the quick commerce space. Now also there has been an aggressive fundraise when it comes to the quick commerce space, and the three large players, Swiggy via fresh issue, they raised roughly $0.5 billion, Zomato via QIP, it was $1 billion, and also Zepto has been in news for a lot of fundraise coming in to the tune of almost $1.35 billion. So funding has increased, and also importantly, the discounting that has also intensified. Now, so speaking of the intensity, there are two factors going ahead. The first one being the incumbents are planning to expand their dark stores, and also interestingly, horizontal marketplace, they are also expected to enter. And when I talk about horizontal marketplaces, this includes Amazon as well as Flipkart. Also, the key triggers also in the quick commerce space, if you look at it, they include Flipkart Minutes being launched in October last year, and also Reliance, as per media reports, is expected to come in the quick commerce space for the third time. Interestingly, Amazon India is also reportedly working on an Amazon quick commerce delivery space called Taze as well. Apart from this, Jefferies also came out with this report today, and there was a downgrade to hold target price set at 275 rupees per share, and they've stated that they will be also trimming the FY26-27 consolidated EBITDA number between 12 to 15%. Now, of course, the GOV number that's expected to grow almost 65% when it comes to Blinkit, but the cash cow still remains the food delivery business. Also, if you look at the SOTP business, of course, over there the breakup, of course, going in the larger chunk going to the food delivery, roughly around 49%, followed by Blinkit at 49, almost 29%, and going out in Hyperpure segment also coming in single digit when it comes to the SOTP contribution as per Jefferies report.
Thanks for taking us through all of that. Of course, Zomato, rightfully the big story of the day, a massive cut coming in on an intraday basis on the back of that downgrade coming in from Jefferies. But what does this mean for Zomato going forward? Let's go across and revisit Nikunj Dalmia's take on the same. Listen in.
See, Zomato's market cap is 3 lakh crore. 3 lakh crore is the current market cap of Zomato. The stock has seen a run-up of about 150%, 160% in last 12 months. That's an extraordinary run-up for any stock at that kind of size. Now, Zomato has had series of events which re-rated the stock, turnaround of the food delivery business, pickup of the quick commerce business, clear fundraise which was successful, see realization that they can deploy their cash flow and start building on that platform from food delivery to quick commerce to now entertainment business which is called as District. But at 3 lakh crore, what else could go right for Zomato and what else could go wrong for Zomato? I guess in the near term, whether it is intensity or the landscape in terms of quick commerce, that in a sense would be a problem. A year ago, Zomato was the only port of call if you wanted to buy a food platform company, and now Swiggy also is there. So it's always this little bit of choice which will have impact on the way how flows would move. And see, looking at the DMart numbers, the fact that they've also added 10 stores in the quarter gone by, which means that the big box retail is just not slowing down. So one makes an assumption that there is a competition which will only intensify in the quick commerce business. Why are we assuming that the companies which have put in billions of dollars in creating brands like a DMart or a Reliance Retail and other, they would take it light? So I expect that somewhere more than the competition in the quick commerce business, the big box retailers will also make a comeback in order to protect that turf. And that in a sense could really have a psychological impact on the way how the stock is going to move. Now, is the story over for Zomato? Of course, no. The size of the opportunity, the moat around them, the brand, the innovation will keep it going. But at 3 lakh crore, to sustain that kind of a market cap, you need something special. And that special, I think, may not really happen this year. So the stock is going to be either flat with a downward bias, but you cannot make a case that it can give you like a strong double-digit return like it did last year.
All right, that's a take coming on Zomato from our editor-in-chief also, Nikunj, who has spoken about Zomato. Of course, the stock has run up a lot, and now that's what, the competition is intensifying. The best of the time is already priced in. The best of the, this is what one assumption which is coming in from brokerages also. Let's see how stock fares for this year, though many of the brokerages are still betting on this particular stock. Let's see what happens.
Absolutely, but on that note, we'll wrap it up on this edition of Your Trades. Thanks so much for watching.